Welcome back to Candlestick Signals for today's market, August 8th, 2025. I'm here to unlock actionable trading insights designed for active traders, investors, and portfolio managers. Today, we're diving deep into the most critical candlestick signals shaping market sentiment and sector performance. Let us jump right in and explore the patterns that could define your trading strategy for the days ahead. Our first focus is on the technology sector, which led the charge today with an impressive gain of 6.2%. Translating to a market capitalization change of $82 billion. Software and cloud computing sub-industries were the primary drivers of this growth, each posting increases of around 7%. Hardware and semiconductors weren't far behind, with weekly returns hovering at 5.8%. The sector formed a powerful bullish engulfing pattern during the afternoon session, signaling a potential continuation of the current uptrend. This formation suggests that buyers are firmly in control and are pushing prices to new heights. In fact, the technology sector has demonstrated robust momentum for several weeks, and there's a strong possibility that this positive trend will persist, potentially setting new record highs in the near future. Moving to the healthcare sector, we observed moderate but steady growth, with pharmaceutical giants like Johnson & Johnson and Pfizer posting notable gains. The overall sector market cap increased by 4.5%, equating to a change of $61 billion. A hammer candlestick pattern formed just before the closing bell, indicating a potential reversal of the recent downtrend and suggesting strong support at current levels. This pattern is particularly significant given the sector's recent volatility and could signal a shift in investor sentiment towards healthcare stocks. The energy sector presented an intriguing scenario today, with a long-legged Doji candlestick forming across many of the major oil and gas stocks. This pattern, characterized by long upper and lower shadows with a small real body, indicates significant indecision in the market. The sector saw a modest 1.2% increase, resulting in a market capitalization change of $18 billion. Key players like ExxonMobil and Chevron experienced wide intraday trading ranges, with prices testing both support and resistance levels throughout the session. This Doji formation suggests that a significant move could be imminent, but the direction remains uncertain. Traders should watch for a breakout in either direction, potentially signaling the next trend for energy stocks. In the consumer discretionary sector, we witnessed the emergence of a morning star pattern, a bullish reversal signal that typically occurs at the bottom of a downtrend. This three-candle formation began 2 days ago with a large bearish candle, followed by a small-bodied candle yesterday, and completed today with a strong bullish candle. The sector posted a gain of 3.8%, increasing its market capitalization by $45 billion. Retail giants like Amazon and Home Depot led the charge, with their stock prices reaching new intraday highs by mid-afternoon. This morning star pattern suggests that the recent selling pressure in consumer discretionary stocks may be exhausted, paving the way for a potential uptrend in the coming sessions. The financial sector presented a mixed picture today, with a shooting star candlestick pattern forming in several major banking stocks. This bearish reversal signal, characterized by a small real body near the low of the candle with a long upper shadow, suggests that bulls pushed prices higher during the day but failed to maintain control by the close. The sector as a whole saw a modest decline of 0.8%, equating to a market capitalization decrease of $12 billion. However, it's worth noting that this pattern occurred near significant resistance levels, potentially indicating a temporary pullback rather than a full trend reversal. In the materials sector, we observed the formation of a piercing line pattern, a two-candle bullish reversal signal. This pattern consists of a bearish candle followed by a bullish candle that closes above the midpoint of the previous day's body. The sector gained 2.5%, translating to a market capitalization increase of $22 billion. Mining and chemical companies were the standout performers, with stocks like Freeport-McMoRan and Dow Inc. showing strong upward momentum. This piercing line formation suggests that buyers are stepping in at current levels. It could potentially drive prices higher in the coming days. The utilities sector presented an evening star pattern, a bearish reversal signal that typically occurs at the top of an uptrend. This three-candle formation began with a strong bullish candle 2 days ago. It's followed by a small-bodied candle yesterday and completed today with a bearish candle. The sector experienced a decline of 1.5%, resulting in a market capitalization decrease of $15 billion. Major utility providers like Nexter Energy and Duke Energy saw their stock prices retreat from recent highs. This evening's star pattern indicates that the recent bullish sentiment in utilities may be waning, potentially signaling a shift towards a more bearish trend in the near term. In the industrial sector, we noted the formation of a bullish harami pattern, to candle formation that suggests a potential trend reversal. This pattern consists of a large bearish candle followed by a smaller bullish candle that is completely contained within the body of the previous candle. The sector gained 3.2%, increasing its market capitalization by $38 billion. Manufacturing and aerospace companies led the gains, with stocks like Caterpillar and Boeing showing strong upward momentum. This bullish harami pattern indicates that the recent selling pressure may be subsiding, potentially setting the stage for a new uptrend in industrial stocks. The communication services sector displayed a hanging man candlestick pattern today, a bearish reversal signal that often appears at the end of an uptrend. This single candle pattern is characterized by a small real body, little or no upper shadow, and a long lower shadow. The sector saw a modest gain of 0.5%, translating to a market capitalization increase of $6 billion. However, the hanging man formation in major telecom and media stocks suggests that despite the day's gains, sellers were testing lower prices and could potentially take control in the coming sessions. As we conclude our analysis, it's clear that today's market activity was marked by significant candlestick formations across various sectors. The technology sector's bullish engulfing pattern and the healthcare sector's hammer formation suggest strong bullish sentiment in these areas. Meanwhile, the energy sector's long-legged Doji and the financial sector shooting star pattern indicate potential volatility and uncertainty. The consumer discretionary sector's morning star and the materials sector's piercing line patterns point to possible trend reversals and emerging opportunities. Investor sentiment appears to be shifting from cautious optimism to measured bullishness, particularly in growth-oriented large-cap stocks. The confluence of positive earnings, surprises, and favorable technical setups is attracting renewed retail investor participation. While institutional flows are trending positive in defensive sectors, as we look ahead, traders should remain vigilant for volume-confirmed breakouts and sharp sentiment shifts, especially in sectors showing clear reversal patterns. In summary, today's candlestick analysis reveals a complex market landscape with both bullish and bearish signals across different sectors. The technology and healthcare sectors show particular strength, while others, like energy and financials, warrant careful monitoring. As always, it's crucial to combine these technical insights with fundamental analysis and broader market trends to make informed trading decisions. Stay tuned for our next report, where we'll continue to uncover the most significant candlestick signals shaping the market. Till then, happy trading. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.